I'm Alison from FX Scouts. In this video, I want to show you a step-by-step trading example of how to trade the head and shoulders pattern. The head and shoulders pattern is a high probability pattern, which means that if you can identify it correctly on the charts, it will likely end up in a reversal. I'm going to go very in-depth in this video, and by the end of the video, you should be able to correctly identify head and shoulders patterns, but you also should be able to identify your exits and your entry points. If you want more videos on trading examples, please go ahead and subscribe to our channel. It means that we can continue to make free videos like these ones. A very important point to note before we get started is that everything I discuss in this video can be used across different time frames and across different assets. And this is because the price action remains relatively consistent. So let's get started. First, it's important to know how to identify head and shoulders patterns. It's a very popular and easy to spot chart pattern in technical analysis, and it consists of a baseline with 3 peaks. And it's one of the most reliable trend reversal patterns you will find. You get the normal upright head and shoulders pattern, which signifies a bearish reversal, and then you get the inverse pattern, which signifies a bullish reversal. Here is an upright head and shoulders, and here you can see the first shoulder stops at a level of support. You then have the head, which rises above the first shoulder, and then a retracement back to the level of the previous pullback. Then the development of the next shoulder. And then the pattern continues downwards. The head and shoulders is confirmed when the pattern passes the neckline over here. With an inverse head and shoulders, you have the same thing, but the pattern's basically upside down. So here you have the formation of the shoulder to a level of support, which is usually marked on your chart. Then you have the formation of the head, which goes lower than that support, but retraces to a similar level of support, and then the development of the next shoulder. And the confirmation is when the pattern continues upwards beyond the neckline. So how exactly do you trade these patterns? So if you look at this real trading example, I'm trading the Australian dollar, Canadian dollar on the 4-hour chart. And the first thing I look for is support and resistance. I go to a higher time frame to perform my analysis, i.e. I perform it on the daily chart, and I draw out the support and resistance levels, as you can see over here. I then see that price is moving up from my level of support, but retraces towards it and goes down below this level, but again reverses. As you can see, this is when you might actually identify that it could be the development of the head, i.e. that the market makes a lower low further into my support zone. So I then wait for the development of the next shoulder, again to the support zone, which it does over here. And then I wait for the confirmation, which is the movement back towards the neckline. And as you can see, there was the formation of a big green candle, which means that there's a strong bullish momentum. And it also means that there's a fading momentum for the sellers. I bought at the close over here beyond the neckline. And I placed my stop just below the right shoulder. And then to determine my profit target, I measured from the neckline to the bottom of the head. And that gave me 70 or so pips. And so that gave me a risk-reward ratio of 1 to 1.7, which is a very good and quite conservative ratio. Now, you should note that head and shoulders patterns are not always going to look perfect. You're not going to always have the 2 shoulders ending at exactly the same level on the neckline, but it does not discount the fact that these are indeed head and shoulders patterns and that you should expect a reversal if you see that pattern. So whether you're trading double tops, whether you're trading bull flags, whether you're trading head and shoulders, you will basically go through the same process. You will find your support and resistance. You will then identify the chart pattern. You will find your signal, you will identify your trigger, you will then set your stop loss, and then you'll identify your profit target. Thank you so much for watching. If you have enjoyed this video and you want more like it, please remember again to subscribe and like, and please send us any questions through to fxscouts.com.